I always thought that dividend stocks were going to be the calm part until two of mine have nuked over the last couple of months. So I have sold them and I have moved stuff around. And in this video, we're going to talk about dividend ETFs. And a lot of people have been asking about this sort of video. So today I'm going to showcase the three that I will be buying in 2026 or even earlier than that, and what I've already done with my portfolio and what I will be doing and why I've done the change, but also a little change in terms of the fabric of my portfolio, which will make it have growth and also income, but divided much easier. We'll get into it. So if you like this sort of stuff, slap a like on the video, comment what ETF you like in terms of dividends, and more importantly, subscribe if you're new. Now let's make it very, very quick in the lines of dividend ETFs versus, say, an individual stock. So for example, on my pie here, nothing amazing, you have two things now, and I will showcase it and I will go through, so stick around, what the overall plan is. Because I have bought into one of the dividend funds that I'm going to mention. It's an easy one. But diversification across hundreds of companies, or in this case, thousands, which is quite nice. Lower volatility, important. Passive, easy, stress-free, obviously. Lower risk of dividend cuts because they have such small weight across the board. It's not going to go bamboozle. And I'll explain why I've sold two of my individual stocks because of that situation. And also, the yield is more stable. Depends on the growth of the market, obviously, but the yield is a lot more stable. You know what you're going to get. So when you put it into like Snowball Analytics, it will kind of showcase it in a much easier form versus, say, an accumulation fund of an ETF. Now, scrolling down a little bit and showcasing the individual stocks, yes, they're different, but there's higher upside, obviously. Yes, that's a good thing. There's higher dividend growth potential, but the volatility is much higher. It requires much deeper research and discipline, and you should have a much smaller spread across the board with these. And as I say, I will be talking about my personal thing here because I love owning individual stocks, and I do. But I will be selling at least 3 of those stocks in the next couple of weeks, only because I feel it's safer to do so regarding stable income, as I alluded to it, and the situation around the volatility. Let me somewhat explain this. Because, for example, I had Hikma. And Hikma realistically is a decent stock, but it's down a lot. But this is just one of the situations. Low revenue. They've missed out on their forecast. It went down by like 2%. The price nuked. You can see on the screen, it nuked massively. So that kind of like annoyed me. There's another one as well. Hilton Food Group. This really annoyed me because what happened here was, this was crazy. It's got all the good metrics. It's got the good dividend yield. It's got the good growth. It has a good streak. But twice this has happened, right, this year. And you can see them. There's one here, big dump here, and a one here. Why? Tariffs was one. Meat supply and raw fish supply has been changed due to tariffs and consumers' supply, demand, whatever. They're expecting really poor revenue due to those tariffs and those knock-on effects with supply and demand, also the rising costs. So having a food situation here is a bit of an issue. So yeah, I know it looks like I'm flip-flopping and I do apologize, but you have to be very, very ruthless with your stocks. Individual stocks, you have to know everything. You need to understand what's happening in every single investment meeting, any sort of situation that could be the macro side of it in terms of tariffs. What is Donald Trump going to say and come out next? So, as I've alluded to it, I will be focusing on really solid, obvious stocks alongside a couple of ETFs that offer different things and mixes. So let's get through it. But obviously with an ETF, right, just to kind of make this beginner friendly for you, it is the best thing you could probably do if you are just looking for something simple. As I said before, it smooths out the ride because your income becomes from, many, many different places instead of 5 or 10, which is important. And I know when you look at the bigger picture and you go, well, if you buy 10 stocks, you just keep buying into them and buy the dip. But sometimes buying the dip doesn't really help much when you've already lost thousands of pounds and your income's a lot lower. That is where you've got to kind of fall into that kind of situation of risk reward. And that's the thing. The whole point of it is stable income, lower volatility, and absolutely zero stress. Because when you pick dividend stocks, yeah, as I say, I've seen many content creators pick 15, 20 stocks, hold them for years, and made good money. But also you got to look at the downside to it. There is a risk, right? There is a risk that one of those can just vanish, especially in the UK, especially in the retail sector, especially even in the food sector. And that sector that could wobble, could really damage 5-10% of your portfolio. But if it's in an ETF, it might do nothing. It might just average out completely. So, spoiler alert, you've probably seen what was already on the screen anyways. FTSE All World High Dividend Yield. Now, you probably know this one from the All World Fund that I currently have in my stock market portfolio. But I will be probably changing that as well because I've got an idea. And I'm going to go through the idea and I'm going to think out loud and I'm going to talk about it because I think it's important. So, what is this? 2,179 holdings currently. It has a pretty decent yield considering. It has global exposure and it has a lot of situations around income first, simplicity, and no stock picking, obviously, because it's got the most amount of stocks. It is tracking the high dividend yield stocks across the entire globe. Let me go through it in more detail because its performance is actually relatively good. Its fee isn't too bad considering what it is. There isn't as much crossover between the All World Fund and this, so you can have both if you wanted to, like myself currently. Now, you can see there's a 40% weight roughly in the United States, you've got Japan, you've got the UK, Switzerland, and others. Financial sector is pretty heavy, but you do have lower weights across the board. But the reality is with this, these are solid companies because they are a high dividend stock, which is important in terms of the health of any stock. Now, when we talk about this, its returns are pretty damn good. Across the board, even in the sticky patches, it actually has presented a positive result, which is important for the growth of the portfolio if you're dollar cost averaging in. And you also get a dividend yield. Not amazing, but it is more around the global exposure of this. This is kind of like your pillar, realistically, and this is how I'm going to think about it and I'm going to talk about it. This will be kind of, if you want to, and it will be for me, spoiler alert, replacing my All World Fund because this has similar performance without the volatility of, say, the tech stocks, but more importantly, it will give you a yield. It may actually increase its yield as things change in price too, so be mindful of that, and that consistency will be important. But the main thing I've already alluded to is the volatility. The volatility of it is relatively low. Over the last couple of years, it has been roughly 10 to 11%. Really good. And that's what you kind of want. So yes, it is an ETF, that is obvious. I picked it. It doesn't get too volatile. And it's instantly probably going to calm the entire portfolio down. Already with this, I've made a bit of money. Now, the second one that I do want to buy, and I probably will be buying, is the obvious in the room. I do apologise. The UK Dividend Fund. Now, this is all in the UK. There's only 51, so there's a little bit of jeopardy there. But these are really solid. It's got good yield. They are good sectors. You'll see that in a minute. It has slower growth than the global, but its performance is actually relatively good considering it is the UK. Within the UK, right, there's a situation where we're looking to get our stock market doing well. I don't trust the politicians in that sense, but I like the idea. So it could be good for your income-focused investors and people who want UK only, which kind of some people do. But with this, there's a situation we need to talk about. Let's scroll down because with this, its performance is really good over the last couple of years. And that's the thing that really kind of thinks, you know what? How good is this? Is it going to continue? And it probably will, realistically, because when we talk about how the performance has been, there's been a little bit of a red negative on 2022. But overall, this has probably outperformed a lot of ETFs realistically, and you also get a very, very good yield. Let me go through that because that yield is roughly nearly 5%. This is a really good income one, and it performs and gives you returns on your investment as well. Even with certain sticky patches that I've alluded to it, you know, there's periods here, even in the stock market crash with COVID, it went down 26%. You can imagine a lot of individual stocks went a lot lower than that. So yeah, there's an element of, there's less in terms of stocks, but the performance could be really, really good over a consistent period of time. I mean, let's be honest here. If you're looking at that, that isn't bad at all, really. So yeah, there's been a couple of crashes here and there, but every market's going to crash, and that's just the reality of life. But you're still probably going to get an income through that. And the final one, an interesting one, and actually a very, very popular one on this website, which has tickled my fancy. This is a developed markets dividend leaders, 100 in here. There's a decent amount in the fund as well, as you can see, 3.3 billion currently. Now, with this, its performance is very, very good too. With the situation around, the obvious in the room is it is the top dividend stocks across mainly Europe. So when we talk about this, you got United States 14%, you got France, you got United Kingdom, Italy, and the others. Basically, developed worlds. And there's some fantastic stocks in here. And also, it doesn't really worry too much about the technology side of it, which is important. But this one has had by far the best performance in terms of returns and growth. And the thing that is absolutely mental about this fund, look at 2022, 22% up. Really, really good results, considering the last one I looked at was down a little bit in the UK. But the dividend yield is also really good, 3.65%. That's all right, considering. Yes, as I say, it could go a little bit higher in terms of that percentage mark, but realistically, that's a good fund. But even though I absolutely love ETFs for reducing the volatility and all that kind of stuff, I still love what's on the screen here, individual stocks. And I want to talk about some individual stocks. And the main thing with individual stocks is you need to do a buggerload of research. And this is where Stockopedia comes in. I've mentioned it before. A brilliant website that will give you certain metrics that you don't always see easily when you do a bit of research on Google, especially if you go onto like Yahoo Finance, you're just like, whoa, what the hell? This tells you a lot more stuff. Now, with Stockopedia, and you can see on the screen, this is Kingfisher. Kingfisher is a massive company that I've been considering buying anyways. But you can see overall the forecast of the PE ratio, the dividend yield, return, but also the metrics here. I always go for quality stocks as much as I can. Yes, past data doesn't indicate future performance, but when you look at quality, that's important because the quality of a stock will tell you if you're buying a dividend stock. We're not talking about technology speculative here. We're talking about a stock that's been around for years and years and years, and a quality one should be good for one reason, their balance sheet. Are they bulletproof? Will they always pay dividends? That's what you're always after, right? The value of it is important because it will tell you if it's overvalued or undervalued. Obviously, momentum's obvious. It's just the momentum of the stock price. Most things are currently high in the momentum spectrum anyways. That's just the reality of it. So yeah, this report here, there's a link below and I'll showcase a link in a minute. If you want to get a load of information about top quality stocks currently that are trending high with momentum, but also could well be a really fantastic dividend option for individual stocks. There's a couple on here. Obviously, the first one, kind of an obvious one, Kingfisher, by far one of the best currently in the UK. But yeah, there's a link if you want this completely free, get your download. And obviously, if you want to use a platform, there's a link below. There's money back guarantee, free trials, all that kind of good stuff. Jump in. But on my own portfolio, this is it currently. We're going to talk about some stuff because as much as I love, as I say, love individual stocks, I will be selling some stuff because what I want to have is something a lot more stable. As you know, I'm a crypto investor. That's obvious. You can see stuff behind me. I don't want the volatility of my individual stocks doing the same sort of thing as crypto, obviously. So I will be selling the worst performing stocks, not so much with yield, just the worst performing stocks in terms of growth cargo, and more importantly, just are they going to be exposed to problems elsewhere? I'm thinking National Grid currently because it's high, but I'm also thinking Phoenix Group because they have the lowest growth cargo on the dividend side of it. That would reduce my weight of my individual stocks, but I will be probably looking at changing certain things around my index funds, which I've already mentioned. I will be buying 2 more, which I've covered on this video. Not financial advice, but I am going to go probably for those 2. But I'm also debating this. Selling my All World fund, because it is an accumulation fund, it has low dividends. That's fine. Pretty much, I could get the exact same thing, as I've alluded to it, here. It's the All World fund. The difference is, that's focusing on dividends. Yes, it's up a little bit. It does perform pretty well. It does have good growth, and it does give you a much, much higher yield. I can move the money into there. I can then add 2 more dividend yield ETFs, have a lot more stability across 3 different sectors, realistically, and have a situation where they're helpful. 50 in one, 100 in another, thousands in that one kind of makes more sense, as well as reducing the amount of stocks I have. pretty much every single stock currently is in the green. I've rebalanced this a few times. I've done all right. And there's some fantastic options here. But realistically, what I want personally in my own portfolio is very, very strong individual stocks that are bulletproof, that have such strong balance sheets. They are always going to pay dividends, but they're always growing their dividend and hopefully making shareholders richer. That's the idea, right? Then you've got the ETF funds that are going to be a lot more of a cruiser. They may actually pay you bigger dividends and have less volatility. Yeah, there may not be as much upside, obviously, but more importantly, they shouldn't crash and burn as often. If you want to follow along, do subscribe and like. The goal is still to hit 1 million. And I think it could happen if those ETFs reduce the amount of potential crashes that could happen. I know there's no massive upside risk here in terms of obviously tech stocks, and I could make 50x, obviously not. But you get the idea. Consistency, reinvest those dividends even into those individual funds and let the snowball compound. Simple investing does always win in the long term. It's about getting set up. The thing what annoyed me more than anything was the fact that those two individual stocks over this year, certainly since I've been holding them, have acted like cryptocurrency speculative assets for no reason. All these ones seem to be pretty solid, but I could make it better. I'm not 100% convinced on some of them, so they will be getting changed at certain points, probably pretty soon, realistically. But the whole ETF world around dividends is a lot better than I expected. If you've not yet done so, there's a video here about other ETFs you can jump into, or if you're interested in, and why you should be looking at ETFs. But more importantly, I hope you enjoy the video. See you again soon.